My friends, hope everybody's staying safe out there. I know a blizzard's hammering a whole lot of the country. So if you're snowed in, I hope you stay safe, stay warm. I wanted to jump in here real quick today and talk a little bit about. We'll go over a little bit of TA in a second, but I wanted to start with the video that I tweeted out not too long ago, and it was Gary on the news, basically talking about payment for order flow and a little bit about what to expect for next week. So let's listen to this real quick.
On one side and companies raising money on the other side, a better deal, and drive greater transparency and efficiency in the middle of the market. So in the equity markets right now, if you place a market order, a retail market order, 95% do not go to the lit exchanges, do not go to NASDAQ or New York Stock Exchange. They go to wholesalers, and they don't have order by order competition. And part of that is because of what you just said, payment for order flow, which is, yes, it's banned in the UK and Canada and Australia. The European Union, through something called ESMA, is looking at that right now. And so I think it's natural that we look to say, how do we drive greater competition?
All right. So bad news. 90 to 95% of retail orders are not going to lit exchanges right now. And he's not just talking about meme stocks, my friends. He's talking about all of them. Although I think I tweeted it out. If not, I definitely will. His interview was long today. And I'll be honest, I haven't been happy with him. It's felt like a lot of feet dragging and everything along those lines. Now, admittedly, once again, trying to always be as honest as I can on this channel, that might be my own ignorance as far as just not understanding how long things may take or anything along those lines. I always try to feel like I'm a pretty good judge of character, and when I listen to people speak, I feel either good about when they're talking or I feel bad about when they're talking. And when I watch Gary's interviews, he makes me feel good. I'll be honest. I feel like I feel like he wants better for retail. That, once again, this channel is just about my opinion, so that's my opinion on it. But I get a genuine sense that things are coming and the tide is shifting a little bit, and the reality is things like this take time, and that's none of us like that, but it is reality. So but he talks about how a bunch of other countries have banned it, and so even though I was very sarcastic in my tweet, there's something just in my gut that's kind of like I think a lot of more things are happening behind the scenes than what we realize. So I highly recommend going and watching his full ideas and full thoughts. And when I watch interviews with Adam Aron, the CEO of AMC, I get the same feeling from him. I mean, when I watched his entire 1 hour interview with Melissa Lee on YouTube and everything like that, I mean, I get a just good, solid, genuine guy feeling who wants his shareholders and his company to win. And so that's why I've always been a big believer in him. All the news, I highly recommend going and reading. Let's just So I highly recommend going and reading all of the filing about the new $950 million bond that AMC is going to be doing. Long story short, is essentially it's paying off higher debt. So they're borrowing from Peter to pay Paul. Pretty sure that's the expression. If it's not, I apologize. But anyway, they're borrowing money. They're taking that money and they're paying off their debt that is due sooner with a much higher interest rate. I think they're dropping 3%. And while you go, okay, a 3% interest drop, that doesn't sound like a lot. But I mean, when you're talking about $950 million, that is a ton of money. And the more money AMC saves, obviously, the better the company is going to do. So every single day, I like seeing, stronger fundamental stuff. I'm sorry, Silverback. I didn't get you and hit you up with the like there. I apologize. Not that you're watching these videos. But anyway, so I like the debt restructure deal. It also appears like it's loosening some covenants. Adam has come out and talked several times before about how he can't. There's certain things that they couldn't do with the covenants they had with their old debt that was at the higher interest rates. So paying off some of that, I think between the SEC and Adam Aaron, I think things are shifting behind the scenes way better and way more than what we can see and make it obvious. And obviously, there's just only so much they can say. Also, too, Gary Gensler, head of the SEC, said that they would be releasing on Monday some reports or ideas about meme stocks. Once again, go watch his entire 11-minute interview. And so, like I said, we got things to look forward to. Someone was telling me today that like some of the FTDs got to be taken care of by February 8th. So I tweeted out earlier, at this point, let's jump into the chart. It looks like we're probably going to be range bound with Max Payne. I believe Max Payne was at $16. Let me double check that number real quick, my friends. I don't like ever giving out information to the best of my ability. So, February 4th. Yep, Max Payne's at $16 right now. So I would imagine some pinning right around there, a little bit above 16, a little bit below 16 is going to be where we wind up for the week. I tweeted out earlier too that we are, we're pretty much range bound right now, my friends. Volume has just been, we came ripping out of the gates, like 15, 16 million volume in that first hour, and then it just gone. And some of it is the Amazon earnings, which right now are ripping, which is why I was saying, everything about this comment right here is the way I kind of view markets. It's when everybody's going right, sometimes I think left might be the best place. So, and all I saw was buy Amazon puts, ride the Amazon puts. And if you did it throughout the day and you sold them before earnings, you did well. Very proud of you. But holding those into earnings was incredibly risky. Once again, everybody was, just kind of like, oh, it's going to look like Facebook, drop off the cliff, that kind of stuff. And so it really is no surprise to me that they're just ripping faces off. Now, once again, I don't do options or anything along those lines. I'm learning more about it every single day. Time is everything when it comes to options. And so I want to learn everything about the time aspect of them is the big thing. I know how options work. It's the time aspect of it is what I'm still going to be learning on. So yeah, pretty much, we came down. We didn't even actually touch, the top of the wedge that we broke out of. We came close to our long-term support of that 1450. Like I said in last night's video, I really wanted that to at least hold. I said in last night's video as well, no matter what, all we want to do is we want to make sure that we are constantly making higher lows. So long as we're making higher lows, everything else in between is noise. So we've got our low here. I'll try to do better about kind of marking the chart as I go, so that way you guys can kind of see. So basically, we got our low here, we got our low here, and now we kind of got a low here. So once again, so long as we kind of keep making these higher lows, that's going to be the big thing that we're going to be looking for to make sure that our bull thesis stays in line. Now, once again, we could get some double bottoms and everything along those lines, but we came down. I think the low of the day was like 1466. That previous low before that was at 1426. So, at the end of the day, we just want to keep, making higher lows. I also tweeted out we had a falling wedge from where we had gapped up, and it looks like we're starting to break out of that. So, maybe a morning retest of that and then starting to move up towards, Max Payne. Like I said, I think we're going to be pretty range bound, but I think good things are coming. So I'm going to go back to the daily real quick. Let's just kind of lean it out, zoom out. So our possible support line that I drew from the buy button collapse in January still holding up just fine. The other wedges are doing great. I checked those earlier. Let's see here. So we got rejected off that, getting up close to the 20-day EMA up here on Monday. No, I apologize. That was Tuesday. My bad. Those EMAs are starting to get to 1856 is the 20-day, 2417 is the 50, 2871 is the 100. Man, that blue's hard to see. And 2869 is the blue. So, like I said, that's why I keep talking about this long-term, bear line, or if you will, from the all-time high, and see how these EMAs are just going to kind of track right alongside it. So once again, that'll be our big kahuna to break once we get there. But guys, just not too much to go over today, so I don't want to waste any of your time that I don't have to. Everything's looking good. Let's check out lastly the indicators. Let's see what the MACD is looking like. So once again, on the MACD, anytime the blue line crosses over the orange line, that's when you want to see, you got potential for a run. The MACD is staying green. That looks good. It's not coming back down. Once again, when the blue line crosses the orange line, that's when you can expect more downside. OBV, good old OBV. Once again, looks about the same. Definitely had a little bit of a down tick, but nothing crazy there. And RSI is still gonna be, we got plenty of room to run on the RSI. So things are looking good, guys. Once again, it's just I'm the same way. Nothing's happened as fast as we might like it, but things are looking good. We could be getting a big old This could turn into a nice little hammer candle here on the weekly chart. So, as I said, lots of things to look for. We'll just see. But hope you guys, once again, stay safe, stay warm, especially with that blizzard that's going on. But between the debt restructure, the SEC is starting to get more vocal. We're making higher lows. Once again, the bull trend is intact. It's just, like I said, no rocket ships yet, and that's okay. We're going to need to do some grinding and some trading, and we'll go from there. But next week, between what the SEC says or anything like that, Melvin Capital is just getting hammered. To me, I think Melvin Capital is about to be the scapegoat of this whole deal. They're gonna be like Lehman Brothers on crack from 2008. So, like I said, just hang tight, relax, go on a walk. Don't stare at the ticker all day if emotionally it just drives you bonkers. Like I said, your mental health is important. Take care of yourself, and we'll wait and see what happens tomorrow, and we'll go from there. Have a good one, my friends.